Hello traders, welcome to your daily economic calendar update for Thursday the 5th of March. And we are leading into the Bank of England and more importantly the EBC interest rate decision. Things are going to get quite heated up in the later part of the session, especially around the ECB, as the euro has already started pricing in the harsh reality and the sheer fact that the ECB is going to start quantitative easing. It's actually my fault. I should have identified this. I went back through my notes and I did make a comment in my notebook that the market is yet to actually identify and price in the enormity of the quantitative easing program, and it hasn't been discussed in the media for a while, so therefore the market hasn't started driving prices lower. But I think yesterday the market started to, and you could tell by the price action, just sold off the euro quite heavily, and I think due to bond prices and other markets that were moving, it's quite clear that they are starting to get into the harsh reality that the ECB plans on buying $60 billion a month of bad debt until September 2016 at least, and also assuming 8% of bonds where the risk will be held by the national central banks, and that's until they'll start that in March, and we're hoping to get details on that tonight, whether it's early March, mid-March, late March, or whether they're going to push it out. I don't think they will. But they're going to do that until inflation reaches at least 2%. So there's a lot of details around the quantitative easing that we hope to get answers on tonight. And that's what's pushed the euro lower. I said yesterday that the data hasn't been terrible and therefore the falls could be contained until we get to the ECB news. And I've got to put my hand up. I was totally wrong on that. The euro sold off quite heavily, and although the data hasn't been bad at all, it's been quite stable. We've just seen that the bond market and the currency market just sold off heavily as people started to realise that tomorrow the ECB is going to start rolling out its plans to try and get the economy started. So that's the reason behind the moves. I hope that helps explain it. Apologies for not getting it right yesterday. But that's the way it goes, I guess. Now, the pound fell due to a weaker UK PMI, and I'm quite surprised by the level of these falls, but I think the pound got pulled down by the euro a bit, and that's going to continue to contain any rise in the UK, in the pound or the UK assets, just because of their link to the Eurozone in terms of geopolitical areas and all that sort of thing. But we do have, before the ECB, we do have the asset purchase facility in the Bank of England's interest rate decision. I think that's going to be a non-event. There is no change expected. They're definitely not going to be looking to raise rates, and we know they're not going to be cutting rates. So I think that'll be a dead event, and we'll continue to trade the pound off the back of the technicals, where I've spoken about the wedge, the rising wedge breakout, and how it could continue to fall. It looks like that's going to be the case, and it broke through a major support level last night. So there could be more downside, and I dare say we will see some more downside after the ECB starts to just confirm with the market and traders that we're going to roll out these plans. Later on in the session, we have some initial jobless claims and some US data, and that's going to be very important for Friday, tomorrow's non-farm payroll. And it may have a little bit of an impact for a short period of time, but I think the ECB is just the key event, and everybody's geared up for that. We did see last night the ISM manufacturing was improved, but the APD was slightly down, which is also potentially going to hinder non-farm payrolls. And Fed Evans also come out and said that he believes that a rate rise in 2016 is his preference. So there's been a lot of mixed data coming out from the US, and that's going to really dictate from the non-farm payrolls what's going to happen with the US dollar strength. I know this isn't a technical video, but I'll just quickly bring it up. As you can see, the last few sessions, the US dollar strength has just continued to grind higher. We spoke about a consolidation and it broke out from that. And we're just seeing a strength in the US, but also that's coming from people piling into the US dollar last night, especially getting out of any European assets, because the US dollar is considered a safe haven, considering that their economy is not going too bad. So it's not attributed to data, and that's just what I want you to identify. We also seen last night, which was expected, the Bank of Canada left their rates on hold, but what was surprising and what actually drove the US CAD lower was the fact that they said that things look stable and there will be no more rate cuts for this year at this stage. They don't see it, and they believe that inflation's okay. So they've moved to a neutral stance. So all of a sudden, they were cutting interest rates, and then now they're saying we're done, and that's having the effect that we wanted. So that's really going to help boost and strengthen the Canadian dollar. So if we're going to trade pairs, and that's what happened last night when I put a Twitter post out about the pound and the euro against the CAD, and those breakouts could have potentially happened, and it happened quite severely. There was well over 100 pip moves to be had there, and that's because the euro was so weak and the CAD after that data was so strong. So you're pairing the strong with the weak, and we got some pretty large moves to be had. So that's what went on, and like I said, tonight's the interest rate decision. It's all about the details coming out of this policy statement, and if everybody needs to just keep an eye on that, tune into it on Bloomberg, CNBC. I'll be doing some tweets about it, live commentary, and if there's any more trading opportunities, I'll let you know. We'll see how it all pans out. And then tomorrow's non-farm payroll day. So tune into the technical video, and hopefully we can try and find somewhere to make some money. But until tomorrow, trade well.